Hi everyone. Really exciting to be here, right? I think before everyone is telling, oh, it's so strange to do a pitch online. Now everyone will come on stage and say it's so strange now to be in front of a live audience, right? Where you cannot even see the smiles, you can only see the eyes. But in my role and in my kind of day-to-day life, I'm very fortunate to be able to constantly think about disruption and think about new changes and what really drives, what the fundamental driving forces behind financial service innovations and change. And when I think really around kind of unlocking the banking value, usually, I would think, very normally, I would think about digital innovation and technology and digital enablement. But today, I really want to focus on a different topic, which is not really technologically related at all. And one force in our society which will fundamentally, and it already is fundamentally changing the role of a bank in our society. But before I go into that, allow me to be Mr. Obvious for a few seconds, right? So digital has brought unprecedented change in shift in banking, right? So it allowed us to serve our customers better. Customers now, many of the financial services, they're on the tap of their phone. It also allowed us to create new products and new opportunities. So recently, as SEB, we launched this new product called Robo-Advisory Service, which is to promote investments. And lastly, but not the least, it does optimize operations. So you can serve and increase the service level to the consumer by, at the same time, decreasing your cost associated with it. And at SEB, we're very, very fortunate, right? We kind of ride the wave when we got some really tangible benefits. So over 70% of all our sales is now done by digital channels. We have double-digit growth on mobile app users and digitally signed documents. But we also have a triple-digit growth on, for example, video meeting adoption and also on chatbot capabilities as well, which is one of the examples how it can drive the cost but also increase the service level to your customers. But obviously, in this digital journey, there's many more things banks can do in order to serve the customers better, in order to grow their revenues, in order to be more dominant in the society in terms of to provide value to the end consumer, right? And fundamentally, when I think about it, I kind of see these three key elements, how as a bank we can become serving customers better in general. So first and foremost, a no-brainer, it's data. And usually people think about data as it is very sensitive and in the wrong hands, data can provide very negative, outcomes. But when we talk about financial services and financial data, actually there's so many benefits it can bring to the consumer around how they can utilize it and help them become financially independent by analyzing their spending, by providing them tips and tricks around how to better budget, how to spend, etc. So data is fundamentally changing how banking is being done, and we see many innovations around that area, both from fintechs, but also from more incumbent banks. But also there's no secret that, for banks and incumbent banks, older banks, infrastructure is one of the key limitations around what we can actually do. Luckily, that is already changing. At SEB, we are investigating and investing on our own kind of neo-bank as such in Sweden called SEBX. But infrastructure is really still an inhibitor towards driving innovation, driving new products, and leveraging capabilities in order to be successful. And the last bit, which kind of I've been thinking about is quite recently, is the ecosystem play. So we are already seeing some movements from Asia and US, where more and more banks are trying to leverage ecosystems. So as an example, most of you probably know Stripe. Stripe is a payment company, a fintech, and most of you probably know Shopify. Shopify is one of the largest globally e-commerce platforms to build your e-commerce business. So what Stripe has done is Stripe has partnered with banks in the US and created their own kind of banking product, right? So it kind of Stripe Treasury, it's called. So in essence, it's embedded finance tool, so embedded financial service tool for other parties, such as Shopify, to innovate on top of it. So now Shopify Balance has an ability to serve customers, their customers, merchants, and provide them financial services. So the reason why I like this example so much is imagine in Shopify, you already have 2 million merchants ready to be banked, who need those banking solutions. So by entering an already established ecosystem, you can very much get some of the benefits out of it and also serve your customers much better. And we're seeing that banks in this ecosystem have three main plays. So you either enter already existing ecosystem, what Stripe did with Shopify. You can either build your own infrastructure around to allow other third parties to build their own products, similar to what open banking is doing. And lastly, but not the least, you can orchestrate an ecosystem. So really pull together many different third parties to serve one customer on their end-to-end client journey. So for example, mortgage, buying a house or buying a car, right? So there's an end-to-end value where many different steps you need to take in order to complete the whole process. But when we think about this digital and these three different things, at the beginning I said to you, I want to present you a bit of a different perspective, what is happening not in this digital ecosystem as such. And one of the driving forces which requires us to really shift our attention, and it is as equally or even more important for the banks and financial services to unlock the true potential, the true value to the society, is, I'm probably not going to surprise you all, but it is that S word, it's sustainability. And I know some of you may think, oh, there's another talk about sustainability, the importance of sustainability, but I want to try and shift your attention a little bit. And usually when we think about sustainability and the climate crisis, we think about that we are in trouble globally, and we are. We cannot ignore that. So 51 billion tons is the amount of green gas emissions we humans make sure that humans human activity produces that amount of tons, which has a negative impact. And in 30 years, we need to go to zero, right? And that's a big task. 1 million species are already facing extinction. 1/3 of the population by 2070 will be living in the kind of climate like Sahara, right? With high temperatures, etc. by 2070. If we are continuing towards this trend, 200 million, and that's a very conservative estimate, are already by 2050 will be climate migrants. They won't be able to live in the places they're currently living just because it will be inhabitable. Some other studies show that it's actually 1 in 9 people by 2050, which will be disrupted and which will need to migrate. 10 million people die every year from air pollution. And if we continue towards this trend, we will need 1.7 planets, as we currently have Earths, in order to sustain the resources we currently use, right? And even on this graph, you can see that the CO2 emissions and the levels have been for many thousands of years have been very much similar, right? And when you see zero, you can see how much it starts to jump, right? So what we did an impact since Industrial Revolution, 250 years, now we will need to undo it in the next 30 years, right? So that's almost at 10 times of the rapid pace we'll need to work in order to eliminate some of the negative impacts we did. And when we think about it, right, so we do in financial services and in other industries when we hear about sustainability, sometimes we do think very negatively. We see the risk associated with it. The clients we fund might be facing risk associated with regulation and compliance. It's another issue. With that, we might imagine that the cost associated with complying to regulation will increase. And we also have loss of business. And that's already happening where, we are tending to say no to crediting even very strong companies just because they have a negative impact on the environment. And the recent headline was the Dutch court actually rules Shell, one of the biggest oil companies, to cut their emissions by 45%. So it's now a ruling which kind of gives a precedent to other companies as well to comply. If they are not moving towards sustainability, they will get penalized and they will be in trouble. And when we think about all those things, right, which I mentioned around, that we need to do so much in 30 years, what we, to cover the kind of negative impact we had over 250 years. When I mentioned, all those negative things associated with climate change, it's natural that we're going to think about these negative and be, fearful around the outcomes or where we're going. But what I really want to focus on is on opportunity, when we think about the Shell example, when we think about the rapid change we'll need to do in 30 years, there's so much resources we will need to have in order to switch, right? And in order to be sustainable in the future. And that requires our focus, that requires collaborative effort, and also requires a lot of capital. And when I think about the benefits and the opportunity which lies within really becoming a sustainable bank, really becoming a key component in the society to drive that change, I see those three different opportunities. One is purpose, right? So we know that around 85% of the global employees who work in corporates are feeling disengaged. They're not necessarily motivated. They don't necessarily can answer to the question of why. Why am I doing this? So sustainability can have a very positive impact to employees. What bigger goal you can have in life than to try to save the planet and to be a small part in that change? And we're already seeing that, around 70 to 75% of between 19-year-olds and 34-year-olds are asking their organizations, and it's important for them, for those organizations, to really become sustainable. Another thing is impact. I don't think there was ever in history in banking sector when banking could become a fundamental driver of some sort of a positive impact into the society. And sustainability is that opportunity. We, as a gatekeeper, we, as a catalyst, and as a financial provider and capital provider, an educator as well, we can become that, a ripple effect and make sure that we are going into the right direction. And lastly, but not the least, growth, right? All those companies we've been thinking about which need to shift, to sustainable, all those companies, as I said, will require capital, will require knowledge, tools, etc. And as a banking organization, we can actually become that catalyst for them. So there's many numbers being thrown around the opportunity size and how much capital we would need in order to transform the way we currently, run our businesses, etc. And that estimate varies, but McKinsey 2020 said that in Europe alone, it will cost us around $28 trillion euros in clean technology and techniques to be invested. Standard Chartered CEO, one of the leading banks in UK, he actually said that it's 50 trillion in the whole world, which they calculated will need to be deployed in order to shift to sustainable business. Moreover, as in banks, so how can bank get involved into this? So we calculated that there is around 5% of direct impact. So, paperless, making sure our offices are sustainable, switch to electrical vehicles, etc., etc. So the direct impact. But the true sauce and the true kind of secret sauce and the true impact is through our offering, through educating individuals, educating the businesses, and providing them with the tools needed in order to shift to becoming more sustainable. And we as a bank, as I mentioned already, we are one of the main stakeholders that has that key and change. And that's an opportunity, but also a huge responsibility for us as a financial sector in general. And look, in Europe alone, almost 450 million people will need to change their habits. And we'll need to make sure that they're going towards that sustainability. So as a bank, we have transactional data, right? So one of the things we can allow and we can encourage people to do is to really focus on the steps they need to take in order to take those actions and become more sustainable. So knowledge and tools, as I mentioned, how much of an impact they have, what they're buying, how often they buy certain things, do they need those things, etc. All those things can be measured through transactional data. There's also those businesses, right, where, there is an immediate now need for businesses to shift their business model, shift their operations, shift their thinking around how they operate their businesses. So that's 26 million businesses in Europe. And to give you a few examples of these mega deals and mega companies like Daimler, right? So Daimler issued their first green bond of 1 billion euros. To shift, to really finance their zero-emission vehicles, their programs, research and development, and establish recycling systems, etc. And many companies like Daimler are out there which need that financing, which need that education, and which need to shift their businesses. And when we look at the in general about sustainability transition, what we see is a continued growth in global sustainability debt market, right? So when we looked at 2015 and compared to 2020, 5-year time, almost 7x. So the whole thing, that market grew 7 times and is now reaching $700 billion. And we are happy as SEB to be part of that process and to be part of that change, right? So our sustainability-linked loans in the Nordics reach around 20% of the whole market, which is great, and we're very happy about it. And even more interestingly, what is currently happening, more products in capital markets and debt markets are being released. So one of them is sustainability-linked bonds. So as an example, if we take 2020 and 2021 and we compare like to like year-on-year growth, that's 15 times X. So from less than $1 billion, now it's around 12 to 13 billion of these sustainability-linked bonds. And we have a few success stories in terms of H&M. They raised around 500 million euros in order, and they linked that issuance, that capital we gain with their KPIs, what they need to achieve in order to be, to not to pay premium, for example, on the bonds. And they linked that with 3 key elements. The first element was to reduce, to increase the recycled materials they use on their operations. The second one is that they said that they will decrease, for example, the consumption, electricity and heating, and shift more towards sustainable resources. And last but not the least, the impact around their manufacturing is also, they said, they're going to decrease the carbon footprint. So we can see that there's, in my opinion, there's so much opportunity out there currently for banks to really make an impact to the whole society, from this purpose to make sure that the individuals and the workforce has that why, the answer to that why question, why am I doing this? The second bit is really to make an impact to the whole society as such and be a catalyst to change. And lastly is the growth element, right? So when I think about many of the communication messages, what fear sometimes does to us when we, at the beginning when I said all these kind of really grim scenario, what fear sometimes does to us is really makes us freeze and not act, right? But opportunities, however, moves us forward. So my key message today and what I wanted to talk to you about is really to shift our perspective from fear to opportunity, and to make sure that not only in financial sectors, but each of your industries, individual, you can make some sort of impact in order for us as a society, as a human race, to go towards a sustainable world, which we can be proud of. So thanks a lot for your time, and I hope this was interesting.
Thank you. Thank you.